Most Bitcoiners hate moving their coins off-chain, but still want the freedom of DeFi. Robin Obermeyer thinks you shouldn't have to choose. He's the CEO and co-founder of Liquidium, the Bitcoin-first lending protocol that will let you move value across Ethereum and Solana soon with no bridges or wrapped tokens. Robin, welcome to Token for Your Thoughts.
Thank you for having me. Great to be here.
Yeah, thanks for coming on. It's great to have you on the podcast. We met at the Bitcoin conference earlier this year. Lots of exciting things happening with Liquidium. So I'm excited to talk to you about that today. But first, it would be great just to have a bit of an intro to you for our guests. Can you take us through a little bit about what you were up to before you entered the crypto space, and then what that looked like, how you ended up building in crypto?
Absolutely, yeah. So I'm Robin, CEO and co-founder of Liquidium, and basically, like for me, this whole crypto journey started around 2020 is when I kind of like actively got into it. Before then, I'm a pretty young founder, so before then, basically, I went to school. I did build Liquidium during while going to university, and then ended up quitting university to do Liquidium full time. But before that, I was always like very interested in sort of product development and then also financial things. So I started kind of like trading very early. In fact, I have a little bit of a story there. I had a virtual broker account when I was 12, and because you couldn't like create a real account back then, I guess you have to do ID verification and everything. So I created this virtual account just to kind of like see what it is like, and I had some stocks that I was following and so on. And then I invested a lot of virtual money, which is like not real money, obviously, into various stocks that I was bullish on, including Tesla, Nvidia, Apple, and a bunch of others. And then I think by the time able to create a real account, I made like from the 25K that I invested in virtual currency, I would have made like hundreds of thousands of dollars.
Oh my goodness. And you were doing this when you were 12?
Yeah. So
oh my gosh.
Very early on.
Wow. Was it like a platform for kids then with like virtual money?
Yeah, exactly. So it was basically an app for your phone, and you could create like this virtual account just to dabble around with it. I don't know if it even had like a real account option as well, but it was mostly for basically just virtual trading. And during so that obviously caught my interest in the
I bet.
market.
This should have been real money.
Exactly. And then so then basically once I was 18, the day I turned 18, I opened my real trading account and then tried to like research all of the things that might be interesting right now. And that's also when I came across Bitcoin. And I actually then remembered that I heard about Ethereum much earlier on, actually in a Minecraft Let's Play.
As you do.
I couldn't invest in that back in the days as well. But once I kind of like dove deeper into Bitcoin and then the larger crypto space, I realized that crypto is not just a stock that you're investing in, but you're effectively investing into a whole market, especially with something like Bitcoin, which is like a decentralized global network. So it's almost like if you would be able to buy shares of the internet rather than individual companies within the internet. You know what I'm saying?
Yeah.
So that got me very fascinated. And that also got me into wanting to build things on that network and build a company within that space. And like, I guess early on, I dabbled around with some of the NFTs that were there on Ethereum, and then also looked into like Polygon and some other chains. And then quickly after, I faced this dilemma of I love Bitcoin because of the fundamentals of it and the security and the decentralization, but I also love the programmability that some of the other chains are giving you, like Ethereum.
Mm-hmm.
So I went on a mission to find something that allows me to have both. And
Yeah.
the only thing that I found that kind of like had the same mission back in the days was called Stacks, which is a well-known sidechain of Bitcoin. And that's kind of like where I would say my builder journey started, where I then saw, okay, they are, even though Stacks is a sidechain to Bitcoin and not really natively tied to Bitcoin, it's still like the goal for Stacks and the Stacks community. They want to build tools that are as close to Bitcoin as possible. So that's
Okay.
kind of how the journey started. And then with the focus on NFTs, I realized that many people have like a lot of money in NFTs, and they can't
Mm-hmm.
really, like, they don't have liquidity at the same time. So that's kind of like how the idea started with an NFT lending protocol, and then later kind of converted to native Bitcoin. We're not on Stacks anymore, but yeah, that's how everything started.
Okay, wow. Yeah, so you got the bug early then, like interested in financial markets at 12 and then started building like right at college. Did you always see yourself being an entrepreneur and building, or did that come later or later-ish? You're still in college, but
um, I I don't know. I think like I was always fascinated with just like creating stuff on my own.
hmm.
Uh, my mom always tells me that when I was a tiny kid, I always wanted to be an inventor. So I guess
Oh,
even more is a form of
okay.
that.
Oh, right. Yeah. So definitely, definitely then. I love it. Yeah, it happened. And okay, so yeah, that makes sense then why then, that was your experience kind of learning about crypto and then trying to find something where you could have Bitcoin but also programmability as well. So and liquidity. So makes sense that that was the genesis for Liquidium. So you started it in 2022, right? So that was is it correct? Is that right? Yeah.
Yeah,
Kind
correct.
of
So
in
2022 is basically
hmm.
when we went through the accelerator program and then also founded the company. I guess the like starting like we started building some stuff on Stacks by the end of 2021, but 2022 is really where Liquidium
Hmm.
started.
Right. And that was like bear market time. So
Yes.
did that have any, were you kind of second guessing or were you just like, let's just do it, like no matter what?
I think looking at it, it was actually the best time to build because you were kind of forced to build something that can survive in a bear market, and something that can
Hmm.
survive a bear market will thrive in a bull market. So
True.
it's kind of like, I guess it was the perfect time to build something, and
Hmm.
it really forced us to create something that has a sustainable business model that solves a real pain point of users, and it's not just a vitamin but actually a pain killer
Hmm.
for the people. And I think that's what's great about a bear market is that you can really understand if your product has product market fit or not.
Hmm. Yeah, absolutely. So yeah, tell us, for those not familiar, what Liquidium is, and yeah, how people can use it.
Yeah, so Liquidium, um, Liquidium.WTF. So that's basically our product that has been around for 3 years now, and I already kind of touched on it. We started as an NFT lending platform on Stacks, and then basically the day that the Ordinals white paper was released, we saw that, and we always wanted to build something as close to Bitcoin as possible. So that was
Hmm.
an obvious choice for us to then say, okay, let's throw away everything that we have on Stacks. Let's use that experience and rebuild it from scratch, but on native Bitcoin, using
Mm-hmm.
the Ordinals standard as basically the NFTs and as the underlying collateral. So ever since then, we have been an ordinal lending protocol, which means the like as a user, what you can do is if you have some ordinals that are valuable, and I guess in terms of the definition, if anybody doesn't know, ordinals are basically NFTs on Bitcoin.
Mm-hmm.
If you have some ordinals that are valuable and you need liquidity, but you don't want to sell your ordinals, you can go to Liquidium and borrow Bitcoin against your ordinals. So no need to sell your ordinals. Just like if you had, let's say, a house in the real world or something like that, and you need some
Mm-hmm.
to do something, you can borrow against your house. It's the same thing. We do it on chain with ordinals, that you can borrow Bitcoin against your ordinals in a fully non-custodial way. And we started with ordinals. We also added some of the other Bitcoin assets like runes and BRC20 tokens to also add fungible tokens. So now we have the full lending suite on layer one Bitcoin, where you can basically borrow against all kinds of Bitcoin assets.
Nice. Okay, yeah, because I was gonna mention that. So you started in 2022, and then Ordinals exploded in 2023. So great timing with that, and obviously utilizing, and offering people being able to borrow against Ordinals. Um, so I was looking at some stats, and I found that by 2024 it said you had processed like over 2,000 Bitcoin across 33,000 loans. And what metric today sort of makes you proudest, or what do you really focus on to look at the growth and how you're doing?
I mean, metrics are always fun to look at for sure.
Mm-hmm.
We like today we have over 100,000 loans, and we've just recently crossed $500 million worth of volume that went through
Wow.
our platform. So
Mm-hmm.
both the $500 million mark and also the 100,000 loans mark were great achievements, I think. But
Mm-hmm.
at the end of the day, really the metric that I care about is like how many users can like how many problems can we solve from our users, and
Mm-hmm.
how large is the user base that has various pain points that we can solve. And so I think like at the end of the day, what is most rewarding is user feedback, somebody telling them like, hey, I absolutely love your protocol, and
Mm-hmm.
I've done this and this, and it helped me so much. Like these are kind of like the things that always motivate me when I hear them. And yeah, I mean the Bitcoin space, or at least the Bitcoin space when it comes to like alternative assets on Bitcoin, is still small. I really want to see the space growing even further, and I think we just need the right tools to do that. If we compare the current state of Ordinals, Runes, and BRC20 to the state where we started, when we started building Liquidium on Bitcoin, there weren't marketplaces. There was no wallet that was supporting Ordinals or Runes. So it basically
Oh,
the only way you could trade these Ordinals was over the counter on Discord. Like there were some Discord channels where
oh,
people
right.
were trading these like very early Ordinals for sometimes like half a Bitcoin or a Bitcoin over a Google
Wow.
spreadsheet. So the Google spreadsheet was kind of like the marketplace.
Oh my gosh. Wow.
And then you would just send the ordinal to somebody and hope that you get the money.
Oh my
And
goodness.
and then we
Wowzers.
were like thinking, okay, first of all, we need wallets and marketplaces.
Mm-hmm.
But the competition when it comes to wallets and marketplaces is so strong. And we at that time were just three people, and we knew that we couldn't compete with any sort of wallets or marketplaces that were coming up. And therefore, we thought, okay, let's stick to our guns and build
Mm-hmm.
lending. Because if anybody comes in and builds a marketplace and builds a wallet, then lending will be the next infrastructure piece that is necessary. So, and I think that was the right call. I think as a marketplace, probably we wouldn't have stood a chance against Magic Eden back when we were still just 3 people with just 1 developer. So,
Right.
yeah, I think overall, if you look at the market now, it's so much more mature than when it started. We have literally Magic Eden, which is one of the biggest marketplaces in the ordinal space. We have a large variety of different wallets now. Liquidium is obviously the lending infrastructure there. We have various token protocols coming out, more and more Bitcoin scaling solutions that are coming out and trying to build even more smart contract compatibility into Bitcoin. So I think it's happening. I think we're still early, but Bitcoin has a lot of catching up to do with other chains.
Right. Yeah. So can you give us a picture of if there is such a thing as like a typical lender, or how people typically use Liquidium, or if you're seeing any, particular trends in usage right now? And then also if there's, a surprising way that you've seen people use Liquidium.
Yeah, absolutely. So there is kind of like 2 sides of the market. Liquidium WTF is a peer-to-peer lending protocol. So peer-to-peer means you have one person as the borrower and one person as the lender. And Liquidium is basically the marketplace that connects the two. So you can almost think of
Mm-hmm.
it as something like Craigslist for loans or something like that, or eBay
Yeah.
for loans, which means you have both lenders and borrowers. Lenders are usually people that have a bunch of Bitcoin sitting around and they want to earn interest on their Bitcoin. So they basically come to our platform and create loan offers. So they say, for example, here are like there is like maybe 1, 2, 3 ordinal collections that they are bullish on. They think the price of that ordinal collection is pretty stable, and they think it's worth it to use that ordinal as collateral. So they will basically create loan offers,
Mm-hmm.
and then borrowers can come in and they can take them up, or like take the offers that the lenders created. The lenders basically have 2 motives why they would do it. One is obviously Bitcoin yield generation, and a lot of yield, because a peer-to-peer lending protocol is always risky in the sense that you have the risk that the borrower won't repay. Um,
Mm-hmm.
so interest rates are fairly high. And then the other motive for lenders is there are a lot of collectors that actually want to accumulate some ordinals, but they don't want to buy them from a marketplace because the price might be too high or whatever. So they almost treat lending like making offers on a collection, and they hope that the borrowers don't repay, because then they get the ordinal instead.
Ah,
So
okay,
it's almost
interesting.
like a buy offer where if somebody repays, they get interest, or if somebody doesn't repay, they actually get the ordinal. So
Mm-hmm.
these are kind of like the 2 types of people from a lender perspective: collectors and people that just want to earn yield on their Bitcoin. And then on the borrower side, you also have 2 types of people. One type who is basically interested in um, trading or something like that, or seeing some sort of opportunities and they need liquidity for it. For example, they might see some token or whatever where they think it's undervalued, so they might want to like take a big buy position. So they are just going to borrow against their existing assets to have some more capital to play around with and do their trades in order to maximize their gains. And then you have the other type of borrower who is actually trying to hedge their positions. So by hedging, I mean, essentially they are only looking for very high loan to value ratio offers. So let's say, for example, there is an ordinal that is worth 1 Bitcoin, and then maybe a lender offers 0.9 Bitcoin as a loan on that ordinal. So then they
Mm-hmm.
might take it, and now they have basically locked in 90% of the value of the ordinal, and they basically see if the price like how the price develops. If the price goes up,
Okay.
they will repay the loan. If the price goes down, they will not repay the loan and just keep the loan amount. So these are basically the two types of personas on the borrower side. So yeah, I think it's very interesting because you asked me like what surprised me. I
Mm-hmm.
thought it would be simple on the lender side, just people that want to earn yield, and then on the borrower side, just people that need liquidity. But kind of like seeing the hedging strategies and the collector strategies on the borrower and lender side, I think is very interesting. We basically
Mm-hmm.
build a very simple tool, and people do with it. Like they create very interesting strategies with it. And by the way, sorry, I don't know if there is like loud fireworks in the background. There is apparently a firework going on.
Oh, okay. Yeah, I was hearing a little bit, but I'm like, oh, maybe someone's moving like a box or something. But
No,
fireworks, it sounds very
I hope it
exciting.
stops.
But
But
yeah, no, it's not too distracting. That's exciting. Is it like a celebratory day or something, or just?
so funny story. In Malta, there's actually fireworks every day. So they have
Really?
fireworks until like during the summer. They have fireworks until midnight, and then the fireworks
What?
start again at 8 a.m. So
What?
yeah, so you literally,
Wow.
if you time it perfectly, you have 8 hours of sleep because you will get woken up at
Oh
8 a.m. in the
my gosh.
morning
This
again
is every day during summer.
every day.
Oh my gosh, they just love to celebrate summer.
Um,
It's like
yeah, they're
I kind of
people.
love that. Oh my gosh, I've never heard of that before. Like every night and then like every morning. What a way to like kind of start your day and like
Yeah.
it's very celebratory. I love that. Okay. Thanks for sharing. That's really interesting. Okay, so we covered these buyer personas. So this is specifically for the Liquidium.WTF, the peer-to-peer platform. Can you tell us a little bit about Liquidium.Fi?
Yeah. So Liquidium WTF is that peer-to-peer
Mm-hmm.
lending protocol for Bitcoin assets, and one like I guess during that journey, we noticed that there is like people love native Bitcoin. Otherwise, they wouldn't even
Mm-hmm.
bother with like Bitcoin native stuff, right?
Yeah.
And most of the institutions and also users that just have a lot of Bitcoin, they prefer to keep their Bitcoin on the Bitcoin network and on chain. They don't really like dealing with centralized platforms or wrapping their Bitcoin or something like that. And at the end of the day, it makes sense. You kind of like want to keep your Bitcoin on Bitcoin, and
Mm-hmm. Yeah.
kind of locks you out of most of the regular traditional DeFi applications. So obviously
Mm-hmm.
now you can do trading within the isolated Bitcoin network. Like you can trade Bitcoin for Ordinals and for runes. But outside of that, Bitcoin isn't really compatible with any other assets. So you don't have
Mm-hmm.
large stable coins on Bitcoin yet. You don't have USDC, USDT, you don't have Ethereum or Solana on Bitcoin.
Right.
Um, but Ethereum people like Bitcoin. Bitcoin people want to participate in DeFi. And then kind of you also have that same fragmentation slash isolation problem on the other chains like Ethereum and Solana. I think there are some more options already, like in terms of bridges and so on, but bridges are
Mm-hmm.
always complicated and mostly centralized. For example, Wrap Bitcoin is probably the most famous. Wrap
Yeah.
Bitcoin is a centralized bridge. So you're giving up custody of your Bitcoin and you're bridging it to another chain, and you have to use another wallet to operate
Right.
with your Bitcoin and so on. And that was kind of like the big pain point that we identified.
Mm-hmm.
And we wanted to let people borrow anything against anything,
Mm-hmm.
including native Bitcoin. We want native Bitcoin to be part of DeFi, right?
Yeah.
And, and that's why we built Liquidium.Fi, which is an upcoming cross-chain lending protocol. It's not a peer-to-peer lending protocol, so it's very different from Liquidium WTF. It is actually liquidity pool based, which means liquid like people are basically supplying assets into a pool. They're earning interest on these supplied assets, and then these supplied assets also work as collateral. So very similar to something like Aave on Ethereum. But
Mm-hmm.
Aave has the same problem with chain isolation. You don't have Aave for native Bitcoin. And then even for the chains that they operate on, you cannot do cross-chain operations. You are always isolated to a single chain or a single layer. Um, and that's basically what we're solving with Liquidium. And I think the one of the most interesting stats that we have seen is actually on Aave. Aave is the largest DeFi protocol with over $40 billion in TVL. And on Aave, over $5 billion of the TVL are in wrapped Bitcoin. And that's wrapped
Wow.
Bitcoin. That's a centralized,
Yeah.
bridged version of Bitcoin, which means
Mm-hmm.
Bitcoiners are desperate to participate in DeFi. They're desperate to use their Bitcoin as collateral. In fact,
Mm-hmm.
so that they are using a centralized bridge to bring it to another chain, to go through that process, which takes forever, is expensive, and adds additional security risks, just to
Mm-hmm.
use their Bitcoin as collateral and put their Bitcoin to work. And that's basically where we come in
Mm-hmm.
with a truly cross-chain solution that allows you to use native Bitcoin as collateral and borrow stable coins from Ethereum and Solana against your Bitcoin and vice versa.
Mm-hmm. Amazing. Yeah, because it's really interesting with with protocols where you're using wrapped BTC, because it is, the majority you're using that most of the time if you're on a DEX, or like you said, those numbers on Aave. Do you think people really understand, the difference, or, that they're using, what the risks are with wrapped Bitcoin as opposed to native? Or do you think it's just because it is sort of the standard in most places, whether you're trading or you're lending, you do tend to see some kind of wrapped asset, that it's just, I don't know, people see it and it's just like, oh, well, this is normal. I mean, like, what do you think? Do you think people like are informed, but they're just doing it because it's what's mostly out there? Or do you think there is still an education piece around people like understanding like the difference between native and wrapped assets?
Actually, I think it's kind of the opposite, where right now, if people want to participate in DeFi, they with Bitcoin, they need to understand wrapped Bitcoin first and need to know that wrapped Bitcoin even exists, and they need to go through hoops in order to use it. Because if you are new to crypto, or like just a normal user, I would say,
Mm-hmm.
you buy your Bitcoin on a centralized exchange, and guess what happens if you withdraw the Bitcoin? You receive it on Bitcoin. You receive, like, you can only send your Bitcoin to a Bitcoin address, which could be
Mm-hmm.
your ledger, which could be a Bitcoin wallet or whatever. But if, as soon as you like off ramp Bitcoin from a centralized exchange, you will receive it on a Bitcoin wallet first, which means
Mm-hmm.
now you have to go through a wrapping process in order to participate in DeFi. So basically, we're like, even if the security assumptions were the same, the user experience is much better, because you don't have to go, like, you don't even have to know about wrapped Bitcoin, or you don't even need to know where to bridge it, or like how to bridge it or so. You can just use your native Bitcoin wallet, or even at some point, like, just withdraw the Bitcoin directly to Liquidium without any sort of wallet or something in between. Just basically
Mm-hmm.
plug the Bitcoin that you get from your exchange or wherever directly into Liquidium without any additional steps. So I think just in terms of, like, for the people that are already deep enough in crypto to use wrapped Bitcoin, they probably know about the additional trust assumptions. And for the
Mm-hmm.
people that don't know wrapped Bitcoin, that might not care about the trust assumptions, for them it's easier to just use their native Bitcoin.
Right, exactly. Um, yeah, it's so great that there is, that you have created this native offering, and so people don't have to there's now an option just to keep it native and then not have to use the bridge or the wrapped assets. So looking a little bit behind the scenes, I mean, what has your building journey been like in Web3? Like you said, you started in a bear market, so you've seen, different cycles. Is there anything that particularly surprised you or wish that you would have known when you first started?
Let's see. I think the uh, I guess one surprise is, and that's still, I think, a major issue in crypto, is just the overall user experience. Like, you really need to learn how to use crypto in order to use crypto. Like, obviously now investing through a centralized exchange has become extremely easy. But I think in terms of DeFi, we still have a very, very long way to go. Actually, I guess just to talk about my quote unquote background a little bit, like what I studied in university while doing Liquidium was actually UI design and management. So uh, my passion was always in creating good user interfaces and good user experience, and that is certainly something that is missing in DeFi. I think what we need in order for DeFi uh, to succeed is not necessarily the fanciest technical implementations that only the hardcore nerds understand, but actually something that kind of anybody can pick up. And a better product, not only in terms of the security aspect, uh, obviously also in terms of the security aspect, but also it should be at least on par with other traditional finance options. And I think that the potential is massive. Just for like, as one example, one thing that I think sucks about the stock market is that you have limited trading hours. You're basically tied to the working hours of the brokers, and there is only limited time that you can trade during the day, and then on the weekends you can't trade at all. And
Yeah.
it's just like, okay, what if I need money on a Saturday and all of my money is in stocks and I want to sell them? There is no way right now. And
Yeah.
even tokenized stocks make so much sense because you're just taking the same asset and you can provide a 24/7 trading market for it. So
Hmm.
if you just put it in the same sort of trading environment and make it as accessible as stocks, then it's a much better user experience already because you can trade it 24/7. And I think that we have to think of outside of the box in the long term and make things more accessible to everybody.
Hmm. Yeah, definitely. I was just at an accelerator event, and the one piece of advice, like I think it was one of the investors gave, was just always like think about your user and like their problems and like their feedback. Just be like really in tune with them. Think about them every day. And yeah, I think that makes complete sense. It's like it's really good advice because I'm like, as a founder, obviously you're thinking about all these different things. You probably have your own experience, which can be, when you're in it, you're probably thinking quite technical or wanting to push the boundaries. Technically. And I was just my previous guest to you, they were talking about just sort of the compromise of, it was Seth for privacy. And he was saying that they have all these ideas around like all these interesting privacy features, but they always sort of err on just making it simple at first so that the user can really, it's not just too complex, like too much, too soon. They don't want to overwhelm. So that seemed very user centric as well. So yeah, I think that's a really good perspective to have, and really good advice seems to be echoing that. So beyond sort of having, I guess, in addition to thinking about your user, is there any advice you would give to founders building in this space, particularly with regards to lending?
Yeah, I think the number one sort of advice that I would give is just do it. I want to clarify what I mean. I'm just do it in terms of bringing something to market in the sense of some sort of MVP, and
Mm-hmm.
also talking to potential customers to find out their pain points. The only way that you can really identify if your product has product market fit is by talking to the users who are going to use your protocol.
Mm-hmm.
There is kind of like, I guess, two. If you think about it, if you're going in it for the first time, you might think, oh, I need to create something that is nice for millions of people. And you're trying to
Mm-hmm.
solve something for many, many people at once. But
Mm-hmm.
that's actually the wrong approach to go about it. You need to
Mm-hmm.
find one person who has a pain point and solve that problem for them. And then constantly go back to that single person and ask them for feedback. Like, here, I built something, like, here is an idea. Would that solve your problem? No. Okay, come back with another idea. Okay, until, like, kind of present them possible solutions until
Mm-hmm.
you resolve their pain point. Get that feedback all the time. Um, and then once you solved the pain point of one single user, I can guarantee that this single user is not the only person that is facing that exact same pain point or problem.
Mm-hmm.
And they will tell their friends where they know they have that exact same problem. And suddenly you kind of like created a medicine where you only had one patient who was sick
Mm-hmm.
with that exact sickness. But turns out that once you built that medication for that one single person and it healed them, there are many, many more people that have that same illness.
Mm-hmm.
So that's kind of like how you should go about it, instead of trying to build something for everyone immediately and not really knowing what the pain points of your individual users are.
Mm-hmm. Yeah, I love that. I haven't heard someone describe it that way before, like literally focusing on one person, because I can see how when, people are putting pitch decks together or they're looking, you always have that figure of like, well, this is the market that we're targeting, and it's like a whatever, like a 50 million, 1 billion target market, which is, obviously, I guess you want that figure to be large. Like we have such a big, potential user base. But you're right, actually like humanizing that and making sure that like what you're solving is real or the pain points are real. Because yeah, I guess sometimes you can make assumptions and users could be like, well, actually, no, like that's not what we need, or that's not like I don't know, whether it's like a user journey, like, no, that's too complicated. So I like that, just bringing it down to that one person, because you're right, then they're likely not going to be the only person that has that problem. So yeah, thanks for sharing. I love that. So looking ahead, is there anything in particular that you're excited about for this year? You mentioned you have an upcoming launch for Liquidium.Fi. Can you tell us about that?
Yeah. So Liquidium.Fi is our upcoming, I would say, flagship product. It's the
Mm-hmm.
biggest thing that we have done since launching Liquidium.WTF. And kind of our next big step. I think it's a great second product, because as a first product, it would be very difficult to build. And now with the experience that we have collected throughout the last couple of years, I think we're able to pull it off. And that product is actually already being tested internally. So we are currently making sure that everything is super secure, and we're going through an audit right now with one of the most reputable auditing firms, just to make sure that everything is rock solid. Obviously, a cross-chain lending protocol requires a lot of security checks in place to make sure that no funds are being lost and everything is super safe and sound. And once that's done, we're expecting to launch around mid-October.
All right, exciting. Amazing. Yeah, we'll definitely keep an eye out for that. Is there anything else happening like right now in terms of like narratives or trends that you're particularly excited about or see having an impact, on lending or what you're building?
Um, I think we're seeing many different approaches of how you would do loans, and I think there are a bunch that are interesting. So lending like lending protocols can coexist because they are addressing different user pain points, different markets, and so on. So I would never say there's like one to rule them all.
Mm-hmm.
I think that you can see it on Ethereum. You have things like Aave, which currently has the largest market share. But then you also have something like MakerDAO or Compound or something like that. And MakerDAO, for example, is a model where you basically mint a stable coin against your collateral position, which I think is also quite interesting. It's a different approach of doing things. Um,
Mm-hmm.
it might be more capital efficient one way or another. There are pros and cons of any way of doing it. We specifically want to target the existing stable coins that are out there and already adopted. So we didn't want to go with basically our own stable coin approach. We wanted to give people USDC, USDT in their hands because
Mm-hmm.
that's kind of like the stable coin that you can use in every single DeFi protocol, but also in exchanges and some banks even accept USDC now. I think one thing that is very interesting is actually Stripe integrated USDC a while ago already. So you can just use your Phantom
Mm-hmm.
wallet with USDC in it, and you can do like regular purchases through Phantom. Um,
Oh, right. Yeah.
Something I also find very interesting is actual like crypto credit cards.
Oh,
Uh,
yes. Yeah.
Visa is already working with some providers to accept stable coins as a settlement for fiat. So
Mm-hmm.
essentially, you can issue crypto credit cards at this point. This is actually something that I also see for the future of Liquidium, whether we build it or somebody else builds it on top of our
Mm-hmm.
infrastructure. But something like a Bitcoin credit card where I can fund a basically an account with Bitcoin, and
Mm-hmm.
then I can use a credit card, and in the background it just borrows stable coins when you are tapping your card. So you have, let's say, you put one Bitcoin in it. Now you have
Mm-hmm.
$100,000 in Bitcoin
Yeah.
in your account, and you don't want to sell your Bitcoin. You want to
Mm-hmm.
keep your Bitcoin there. You even want to earn some yield on your Bitcoin. So you just put it into that Liquidium account. You have a
Yeah.
Liquidium credit card, for example, and then you can just tap it, and it takes a small loan. You can repay that loan whenever you want to. I think that's kind of like a world that Bitcoiners would really love, where they don't have
Yes.
to sell their Bitcoin, but can still like
Totally.
use it.
Yes. Yeah. I love it. It's just it's great, this concept of, being able to use crypto assets, whether it's Bitcoin or Ordinals or something, but then being able to keep them and hold them, for that long-term exposure, but just being able to put them to work, whether it's getting yield or whether it's using it for something in real life, like a coffee, or even, using it for something bigger, like helping, I don't know, buy a house or something. It's just all of these like platforms like Liquidium that are just really enabling kind of real world use of these assets beyond, just holding for the long term. So it's really fantastic, and this is a big part of it, obviously the lending aspect. But yeah, it will be exciting to see what else will come in terms of connecting all the dots, just to making it super usable. Especially hearing, like, in the US, they're considering the exemption for purchases under $200. It's just all these pieces coming together. It's definitely an exciting time for, utility and crypto becoming more used and more mainstream.
Yeah, I think it's a big turning point also that the US obviously supports or like I guess is pro crypto now. Um,
Mm-hmm.
eh, I think that was something that was holding back a lot of the crypto market because the US is obviously one of the most important markets. Um,
Mm-hmm.
Especially also when it comes to lending markets. The US is super, super important. And all of these companies have been trying to, like all of the crypto companies have built foundation structures and whatnot, which I mean, obviously is pro decentralization. So there is that point, but then also you kind of have to sometimes go through weird hoops in order to protect yourself for against regulations. And
Yeah.
now clear regulations will help to make it more tangible for regular folks, and also make it easier for newcomers to actually build a company easily and build products without fearing that they might be sued by because of some regulation.
Yeah, definitely. And it's definitely, I'm sure as a builder, provided a lot of comfort and security in that kind of or not having that fear is definitely nice for sure. All right, well, that's all we have for today. Thank you so much, Robin, for coming on the show and chatting to us about everything that you're building. It sounds like it's an exciting time for Liquidium with the upcoming launch and such a fantastic offering. So yeah, thank you for coming on.
Yeah, appreciate you having me, and sorry again for the fireworks in the
Ah,
background.
no worries. I'm literally gonna Google this right after. Like, wow, what did this originate from? And yeah, like we're obviously all missing the party.
Yeah, so
you know.
apparently that they are basically celebrating a lot of like the Christian people. So there is like Saint everybody, Saint Martin,
Oh,
Saint whatever. And every day there's another person that they celebrate. So
oh
that's why they have
right.
all these events, and it's kind of like Maltese tradition to just do fireworks. There is actually another, like, I guess, unknown fact, which I think it's a fact. I heard it. You can double check that. But Malta is actually a kind of like a testing ground for fireworks. So
Oh,
um, basically, like most of the fireworks are built by the Arabs and China. And
okay.
before they can send their fireworks to the European Union, they will send them to Malta. And then here they will test
Oh,
them, they will approve them, and then they can sell it into the other European Union countries.
oh
So kind of
wow.
like why they have so many fireworks.
Oh, okay, right. Like Malta's just like the capital, it's like of
Exactly.
fireworks in the world or something, probably at this point. That's so interesting. Thank you for sharing. I love that. We've got crypto and fireworks. This is a great conversation.
That should be the
Uh,
title of this episode: Crypto and
yeah,
Fireworks.
literal
Just kidding.
fireworks. Oh, all right. Well, yeah, thank you again, Robin. It's been such a great chat. And yeah, best of luck with the upcoming launch.
Appreciate you. Yeah.
Yeah.
Thank you.
All right, well, that's it for today's episode of Token for Your Thoughts. If you enjoyed the conversation, be sure to subscribe and follow the podcast for more insights from the people shaping the future of crypto and Web3. We'll see you on the next episode.